while some online bullion dealers continue to charge almost $2 over spot for 1 ounce silver rounds, SD Bullion is selling 1 ounce silver rounds at only 49 cents over spot on any quantity. Again, that's $9.99 fine silver for just 49 cents over spot for any quantity. If you haven't joined the over 40,000 precious metals investors by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
This is the Doc with the SD Weekly Metals and Markets Wrap. Joining us today is our good friend, high up in the Denver Hills, Dave Kranzler. Dave, it's great to have you back in the show.
Great to be back here. Well, I'm not high and I'm not in the hills, so I can see the hills from where I'm sitting right now out my office window, and I'm sure there's plenty of people up there who are high. But unfortunately, I'm neither at this point.
And also, unfortunately, Dave, you've had extra time to watch the cartel smash the metals this past week with your Achilles injury. Your feet are probably up on your desk just watching the metals get hammered again.
Yeah, when I'm not writing my subscription reports or quarterly end investor letter, that's pretty much what it looks like here in my office. Where's Eric today?
Yeah, that's a good question. Eric has been out for about 2 weeks, I think. Last I heard, and I think he let us know the day before he flew out, I think he's on a French beach rendezvousing with his Australian girlfriend was the word. So he'd probably kill us for talking about him, but it sounds like he's having a better time than you and I have had this week.
A French beach with his Australian girlfriend. Do we know if he's ever coming back?
Well, he said he was before he left, but we haven't heard from him since, so... So, Eric, if you're listening, I hope you're having a good time. Well, on a more serious note, Dave, metals have been hit hard quite again this past week. On a positive note, we've seen physical demand pick up, but it's been at the expense of prices. Gold's been hammered back under $12.25. Silver's back under 16, trading what I think about as low as $15.40 a couple of days ago. So what's your take here on the latest smash in the metals and where we sit right now?
I got to tell you, it feels like, I mean, the intervention is just so blatant, like with that fat finger waterfall cliff dive we had. You know, what was it, about 2 or 3 weeks ago? And then about a week later, there was the similar, you know, vertical zip line drop in the metals when the Tokyo market opened. I think it was last Monday. I think it was the Monday that was right before the July 4th holiday.
We can use metals analogies, Dave. We can just say they've been shoved down the mine shaft.
Perfect. Yeah. The lift that takes people down the mine shaft, the cable, it looks like the cable broke. That's what the chart of the metals looked like on the Monday right before July 4th. And I mean, there's people out there who wouldn't believe that there was actually official intervention or manipulation going on unless the manipulators actually came out and said, yeah, sorry, we're doing it. We admit it. You know, you got to believe it now. And even then, there'd probably be some who still wouldn't believe it. But when you see things like massive amounts of gold and silver derivatives meaning futures contracts or forwards, being sold all at once during very quiet periods of the market. If someone really had a large quantity of contracts of futures to unload, they wouldn't do it all at once during one of the quietest trading periods of the trading week or the trading day. They would wait until, you know, you get a very active period and there's a lot of traders around and the market's really liquid, and you'd work those contracts off over time. Because if you're a seller, you want to be a profit maximizer, unless you're insane.
Even more than that, Dave, have you ever heard this Jim Sinclair's story from the top of the last bull market when he wanted to unload his gold position, what he did?
What did he do?
So this is the exact situation we're talking about. If somebody has a large gold position or silver or any commodity and you want to unload it, if you're doing that for your own profit, you want to get the best possible price. So how would you get the best possible price? You want to actually create the perception that there's massive demand coming into the market, right, Dave?
True, that's a good point, and that's what a skilled trader would do.
So this is what Jim Sinclair did. There had been rumors, so we're talking late 70s, early 80s. There had been rumors in the market that the Saudis were getting ready to enter the gold market. So obviously you're talking about billionaires with massive money, right?
Right.
So Jim Sinclair thought we were near top, and he wanted to unload his gold position. He was supposedly the largest player in the gold market. So if you're the largest player in the gold market and what do you get out, and you want to get out, what do you have to do, Dave? If you want to get out at the best price,
you want to cultivate the bid side.
Right. So this is what Jim Sinclair did to cultivate the bid side. He went out and he hired about 6 Muslim-looking dudes. He went and bought them like headdresses and long tunics and stuff. He hired out a limo. He put them all in the limo, and he drove them down to the floor of the exchange, and he walked them in. And they all walk in, and boom, everybody's buzzing. Gold's, and suddenly there's a big bid for gold, and Jim Sinclair unloads his entire position into that demand.
That's awesome.
So that's what you do if you're a skilled trader, and you're a large participant in the market, and meaning that if you want the best price, you need volume to be able to sell your position into without affecting the price. So if you had that gold and you're actually trying to sell it for a profit, you might not do that exact same thing, but you're thinking along those lines, if you're a professional, of trying to stimulate the demand volume to unload your position into without affecting the price.
That's exactly right, and that's how we know that these fat finger events or the mysterious huge seller that drops a bunch of paper on the market when the Tokyo market opens on one of the quietest trading periods of the summer, we know that it's manipulation. That's that's the only thing that can explain that. So the manipulation is it's become blatant, fully apparent to anyone who is willing and able to see the truth. And you have to wonder what's going on that would cause them to manipulate the market like this. It's almost frantic. And I've been saying to people on the side, it's like, this kind of reminds me of the action in the middle of 2008 when gold and silver peaked in March and were taken down, even right as Bear Stearns was blowing up. Bear Stearns blows up and they take gold and silver lower, and that should have been an event that caused gold and silver to go a lot higher. And they take gold and silver all the way down through the collapse of Lehman, and then in late October that year is when gold and silver and the mining stocks, I think it was early November, the mining stocks started following suit. That's when they started taking off. But it was apparent to anyone who looked back and thought about it, oh, well, they knew that this was coming. They knew that they were going to have to unleash a massive money printing and taxpayer subsidization of the bank program, which is what the TARP program was. And so in order to disguise that, they took down the price of gold and silver, because obviously gold is going to be the canary in the coal mine that alerts people that there's a problem when the price rises. And I think it just feels very similar now to the way it did then. And the same thing is, same thing in terms of what's going on with the economy, and actually even with the financial system. And that is, the economy is starting to fall apart based on real world economic numbers, not these manipulated government and quasi-government organization, statistically, seasonally adjusted, statistically annualized rate numbers. I mean, it's a joke, the numbers that are coming out of the government agencies. And you're also, households are at record levels of debt again. The default rate on subprime auto debt is already at the same level of where it was in late 2008. And then it went higher from there. It's going to go higher from here this time. Only this time around, the problem's a lot bigger because there's a lot more subprime auto debt.
This time you got the student loan bubble that looks like it's about to burst as well.
I saw reference to that article. I haven't had a chance to read it yet, but that was just a matter of time. And it's the same thing with the mortgage market. It's just a matter of time. There's been a lot of first-time buyers who can barely afford to engage in a housing closing deal, let alone afford, the continuous expense of household, of owning a house. And those people are going to start defaulting on the mortgages that the government extended to them that are basically subprime mortgages dressed in drag because they have the government sponsorship behind them. Again, I think it's headed for a taxpayer bailout. But again, and I put this in the quarterly letter that I just wrote for my fund investors. It just smells like 2008 all over again, only this time around the problems are going to be even bigger. And, the one difference is that the banks have over $2 trillion in cash sitting in the excess reserve account at the Fed. And I think that excess reserve account was created for a reason, and I think we're going to see the reason why that account was created very shortly, maybe even by the end of the year.
Yeah, I'd agree with you, Dave. I mean, it certainly has that same feel, especially with the metals. And what's interesting with the metals is the sentiment and how many people we're seeing throw in the towel, that they're so sick of the manipulation and they invested in the metals more for speculation type than understanding that they're as to be used as insurance for wealth preservation, and they're now throwing in the towel. I mean, we're seeing people. For example, stories we've come across in the industry. There's one dealer in the industry that they had a $3 million silver bullion sale that a customer basically called in and say, I'm selling $3 million worth of silver bullion. I'm going all in on Bitcoin at $3,000 Bitcoin. So people are throwing in the towel. What's your take here? I mean, it seems to me that people are giving up in the metals and throwing in the towel, almost like you're saying, Dave, right before the big collapse that they'll actually need their insurance.
Again, you could say if I believe in the contrarian school of thought when it comes to analyzing markets, and so when the public is shifting to one side of the boat, so to speak, that's when you want to be on the other side of the boat. And when you hear of people like that capitulating in this sector, that's what I want to hear, because then that tells me we're probably at a bottom to this latest manipulated takedown cycle. Interestingly, I'm very friendly with a longtime numismatics coin dealer. This guy knows everyone. He's probably one of the brightest guys I've ever met, and he's busy trying to monetize his numismatic holdings and convert it all into gold and silver bullion, because just like everything else has inflated into a bubble, numismatic collectibles have also inflated into a bubble. And so I'm sure he loves hearing these stories of people capitulating on their bullion positions, because it gives him more of an opportunity. If it helps hold down the price for him, it gives him a better opportunity to accumulate bullion at a cheap level, which is what we're seeing India and China do right now.
And actually, finally, in the past week, we're seeing U.S. investors too. In the last 5 days, the U.S. Mint sold more Silver Eagles than they did the entire month of June. I think it was about 200,000 or 300,000 coins sold in July when we recorded the show last week, and now this week we're at about 1.3 million. And in June, the Mint only sold a total of 986,000 coins for the whole entire month of June. So finally, we've seen a bit of a pickup in physical demand here in the U.S. with the price smash.
Do you think that demand's coming largely from the sort of the core stacker community, where it's just like, silver's below $16, I'm going to start buying a lot more?
Yeah, it seems like it for the main part. I mean, we really haven't seen massive money enter the picture, really as much as we did really last year in 2016. And I'm talking like 6-figure, 7-figure purchases. It's been a lot of average working Joes that are, like you said, I think, hey, silver's 1550, 1540, 1560. That looks like a good entry point.
Again, that's another, parallel that we can draw between now and 2008, because I can remember in the summer of 2008, I think it was around then, silver was taken down to about $7 or $8 an ounce.
Yeah, I think it was trading at around 19, and then went from 19 to a low of right around $8. I want to say in October. And I remember that the night of the lows in gold and silver, I maxed out my credit cards. I actually maxed out my girlfriend's credit cards. I think it's probably the only time ever I've bought the low tick. I maxed out my girlfriend's credit cards. I think it was $675 gold, and silver was. I remember I bought, I think, just under a monster box of Silver Eagles, and unfortunately the premium wasn't great, but spot prices around $8 at the time. And I remember premium on 1,000-ounce silver bars was like $2 or $3 over spot.
I was gonna say,
Silver Eagles were about $4 to $6 over spot.
Yes, and I'll confess, I actually maxed out a credit card to buy a couple boxes myself.
So yeah, you're exactly right.
Yeah, and I think I was able to get in there before the premiums blew out to $4. I want to say I paid a $2 or $3 premium, and then they blew out to about $4. So, I don't know what the Mint's sitting on in terms of their inventory of Silver Eagles that is built up, and I don't know what the AP community has in terms of their inventory. But at some point here, if the demand that you saw in the last week continues, we're going to start to see premiums blow out again.
Yeah, and we were chatting about that before the show started, Dave. From my estimates, I estimate that the Mint probably has somewhere around 4 million ounces of silver in reserve, just from what they've done in the past. And I've actually was somewhat surprised this week. 3 of the largest APs actually ran out of Silver Eagles, and they're delayed a week, well, basically meaning that they ran out of all the inventory on hand, and they'll be out of coins until they place a new order with the Mint and they come in. And that's pretty striking because that's a big difference from last year when each of the APs had stocked up probably 1 million ounces each, hoping to see shortages where all the APs make a lot of money during the shortages. So we've seen that situation totally reversed, and we just have basically 2 or 3 days of an uptick in sales, and the APs are sold out. So that means that they're not holding any significant inventories, and the U.S. Mint's probably not holding more than 3 to 4 million ounces of inventories. So it really wouldn't take too much to see those inventories burn through. Probably maybe 2 to 3 weeks of a continuation of current prices, or certainly if the sell-off would continue and get anywhere towards $14 an ounce, I think you'd start to see the market really tighten up. But so far, we've only seen the market tightened on non-fresh product, things like 90% silver, generic 100-ounce bars, 10-ounce bars, backdated Silver Eagles, things like that are starting to dry up. But the current fresh Mint products like current year Silver Eagles, Silver Maples, things like that, they're still readily available from the Mint. So we'll keep an eye on it.
What about the bags of 90%? Because that's usually a pretty good indicator.
Yeah, premiums have started to rise, but it really hasn't been dramatic yet. They have probably only risen about 20 to 30 cents in the wholesale market, and they're still fairly readily available on the wholesale market. So, I mean, really, demand had been so horrible for really the last 3 months until this past week. Really, you're talking April, May, and June, it was bad. Outside of a couple week pickup in May when silver was smashed. That there's really a lot of the secondary market that's been sitting on the market that's been able to kind of absorb and this uptick in demand here. So it hasn't been worked through yet. So like I said, I would estimate that you probably need 2 to 3 weeks of current price levels to see that work through. Or, again, all bets are off if you see silver head towards a high 14 handle.
I'll tell you what's interesting about that. And first I'll preface it with, if it looks like this is the bottom and we start to head higher, I think we'll start to see people chase the market again, and that'll soak up any excess inventory out there really quickly. But sort of in a similar vein with all of a sudden this huge spike up in Silver Eagle sales, it's kind of interesting because, probably over the last, probably since March actually, my Mining Stock Journal subscriber base has been it's been churning on a net neutral basis, meaning I've been getting a new subscriber for every cancellation. For a while I was getting more cancellations than new subscribers, and literally just in the last 7 days I've had a bunch of new subscribers and no cancellations. So I take that back. I had a cancellation yesterday. I think there may be one today. I just haven't looked at it yet. But so it does maybe in that sense. The people who really follow this market and understand it, maybe they're sensing the same thing we are, which it just feels like, this may not be the absolute bottom, because on any given day they can toss a boatload of paper in there and spike the market down. But I think as that happens, I think you're going to see a lot of buying going on. And to sort of correlate with that, I was looking at the Commitment of Traders report. I pulled that up, and this was the one released last Friday that's good through the previous Tuesday in terms of the data. So it's a week and a half old, the numbers, and tomorrow we'll get the new one. But as of the last Commitment of Traders report, the hedge fund trader category in silver was almost net flat, their position in silver, meaning that their long position was not much greater than their short position, and they've been adding to their short position and dumping their longs. And I wouldn't be surprised when the report comes out tomorrow, especially because the price of silver is lower than it was last week, or had been lower. I wouldn't be surprised if when that report comes out tomorrow, it shows that the hedge funds were net short silver at least through this past Tuesday. And historically, when that's happened, it doesn't happen very often, but it kind of marks a major bottom and the beginning of a big healthy move higher. So, it doesn't guarantee it, but that's I want to say, I think the last time we saw the hedge fund trader category net short, and I misplaced the spreadsheet, so I don't have the numbers in front of me, so I might be off on this, but I want to say maybe November of 2015, something like that, they were net short silver. So it looks like this wash, rinse, repeat cycle where the bullion banks short like crazy into a price rise, which is what they were doing for most of 2016 and part of 2017, and then they decide to bomb the market, which is what we're seeing with these broken mining shaft cables trades. It looks like this cycle may have played out, might have a little bit longer to go, and if that's the case, it means we should be heading into a nice rally that'll take us into the peak Indian buying season after the end of the summer.
Yeah, if you go back and look at November of 2015, I think the bottom ended up being a few weeks after that, if I recall, about mid-December 2015.
It was, I want to say December 15th was at least the bottom in gold. I don't know about silver.
And then there was almost a continuous 7-month rally, which culminated in that crazy June, which saw silver prices, gain about $4 in June, and then maybe $1.50 or $2 that night of July 3rd.
Yeah.
And then it was all downhill from there. But yeah, to your point that we saw that same thing, and there was quite the rally. I mean, silver was trading, if I recall, around 1380, 1385, and went from there to, what, around 2180?
Yeah, I don't remember what the exact top was, but it sounds about right. That's been the area that they've been defending because apparently, and who knows for sure, apparently there's major buy orders that kick in these hedge fund algo programs above that level.
All right, well, before we close the show, Dave, if you can let the listeners know where to find your regular, excellent work, both your public stuff over at Investment Research Dynamics, as well as your Short Sellers Journal and the Mining Report.
Oh, well, thanks for the compliment. I guess it's probably debatable as to whether it's excellent, but it's certainly regular. My website's investmentresearchdynamics.com, and the two subscription publications that I offer are the Mining Stock Journal and the Short Sellers Journal. And there was a stock that got the snot beat out of it last week, and I spent dozens of hours researching all the issues related to it, and I presented my findings in my latest issue of the Mining Stock Journal, which I released a day early for my subscribers, so that I could get it into their hands, and so the details are in there. And then the Short Sellers Journal is a weekly publication where I review all the economic data and review the markets, and then offer up some short ideas. And a lot of the ideas have actually been working since early this year. So even though the broad stock indices keep hitting new highs, there's a lot of stocks going on beneath the surface that are plumbing 52-week lows. And I've managed to pick up on some of those, fortunately.
All right, well, Dave, we'll keep our heads down and keep plowing away while Eric sips his pina coladas with his girlfriend on the French beaches.
He's not having pina coladas. He's having like a fine rosé with some multi-year aged cheese and crackers.
All right, well, hope you're enjoying your cheese and crackers and your fine wine, Eric, and we'll talk to you soon.
Thanks for having me on the show, Doc.
All right, for the Doc and Dave Kranzler, thanks for tuning into this week's SD Weekly Metals and Markets.